Hey traders, hope you're having a great weekend. We're just a few hours away from the Sunday Open, and the question is, are you ready for the week ahead? Alright, so we're going to run through a few charts, what's on our watch list, some of the charts we've sent out to our members, just so you've got an insight into how we prepare for the week ahead and the opportunities that might present themselves. So just to give you an insight, this is the watch list we've sent out to our traders this week, so there's a good few charts for you to look at there. We're predominantly going to focus on just a few of the Kiwi charts. So I'm just going to start with the dollar index, and then we're going to move on to some of the Kiwi charts. So dollar index, it's been busting around this 92 support level now for a number of months. From early part of August, we got a push up into the 94.70s. We pulled back down, and then we pushed towards 94s again. And then it's just been meandering between 92 and 93 since early part of November. Now, this is meant to be a seasonal period for the dollar. Whether there's been some added stress on here through the uncertainty through the election, who knows? But what we can say is that should 92 give way, there's going to be an unprecedented amount of selling of the US dollar. So our expectation is that we expect 92 to hold for the short term. We would expect to see maybe a push up into 93s, maybe 94s. And then it's going to be dependent what really happens in the US in terms of lockdown and how the markets move. There's all sorts of issues that could relate to some potential extra dollar strength, in terms of the fiscal aid that's been talked about, that's been refused, and the Democrats and the Republicans can't agree on a number. And when we were talking trillions, we're now talking potential billions. So it's a big disappointment to the market. And will that affect how the S&P, the Dow Jones, the Nasdaq perform? I would suspect so. Now, if the aid allowance is really going to come below par, then and we see something along the lines of lockdown in the US, I would expect the Nasdaq and the real tech stock to continue to surge. The cloud platforms, Zooms, all that kind of tech stuff to really start to fly again. Now, on the flip side, if we get a whole heap of aid package and stimulus from the US, whether it comes from the Fed or the Treasury, expect to see the usual stocks in the Dow and the S&P start to move more than the tech sector. Obviously, the vaccine will help that as well. But just from a technical standpoint and seasonal analysis, we're looking at the dollar index to push higher. So there's a few charts that really do stand out for us. I will take one quick look at the euro, and then, like I said, we're going to focus our attention onto Kiwi charts, because that's where we're going to focus this week. So predominantly we're looking at this bear channel we're seeing right now on the euro, and because of where we are, it's not somewhere I'd really be interested in buying. However, if you start to sell here, you can see short term there's been support found on this short term trend line. So you don't want to be selling in this area, and you don't want to be buying. But if we can see the market break down through here and then produce a lower high, it's going to be a lovely opportunity to short into the 1.16, which should correlate with that 93.50 to 94 on the dollar index. And then it's at this point we'll be able to identify which way we're going to trade based on what the market shows us, not what we think. So if all of a sudden we get an impulsive move here from the buyers and we see a sentiment shift, well, then that's going to be our call to start looking for euro long. If we start to see this market break down and break through support, well, then obviously you're going to see the dollar index probably pushing through 94, and that'll mean looking for further short trades on the euro dollar. So, look at your charts and try and trade from a rule-based perspective, not an emotional-based perspective. So it's an if-done scenario rather than being that rabbit in the headlights and start looking at a chart and going, oh, it's moving now, I want to get in. Have your charts planned ahead of time so you're not rushing and you're literally doing what you've set out to do. So right now, we will trade long if the market breaks above here and we get a lower high. We will trade short if we see sellers come into the market, we get a corrective pattern, and we will trade short. So they're the two if done scenarios. If neither of that happens and price just can stay in this little pocket for a while, then we trade nothing with this market. Okay, so moving over to the Kiwi. Now, if we just jump out and just look at this on, say, a weekly chart, you will see that the market has respected this 69.20 to 69.50 area for a long period of time now, going all the way back to October 2019. Lots of tests through here. And we've not been back through that sort of resistance area until last week. Now, the way this market is moving through here, we may push up a little bit higher and test this short-term ascending trend line. We may do. But on the flip side, if we don't, so I'll look for opportunities if we pierce here and create a false break and then we see sellers come into the market. However, there could be another option, and that other option, you know, as we can see it right now, price is still creating higher highs. We can see that. But we've also broken the short-term ascending trend line. We've got an evening star formation in weekly resistance levels. So I would expect now, based on this movement, that price will come down into at least the 68.76. And it's when it gets into this zone, I'll be working out what to do next. You know, intraday traders can look to trade it from 68.30 down to 68.70. So you've got about 50, 60 points to work with in there. But ultimately, I want to trade it right down to the 66.60s into this area and then look for that seasonal bull move and go along. So, you know, we're looking for more confirmation from sellers to come into the market, because, you know, there's several times we've seen sellers come in and then boom, buyers have just taken them straight out, and that short squeeze continued and just taking those sellers out of the market. But we know that trends usually last longer than we anticipate, which is why it's important that when you are trading, and if you are trading something contrarian like this, you've got multiple points of confluence that would expect the market to potentially roll over. So we've got weekly resistance, we've got commitment traders extreme, we've got seasonal dollar bull moment or bull season, and now we're looking to align the technicals with that. And that's why we start looking at, you know, chart patterns, break of structure, break of cyclical patterns, and from that point we'll then start to make an educated assessment whether we're going to be trading that market or not. So Kiwi is one of our top three charts, you know. And then if we then go to another couple of Kiwi charts, let's take a look at Kiwi Swiss. So if we jump up to the daily, very similar, major structure. Price has been operating in pretty much a broad range, but you can see the type of movement it's had over the last couple of weeks. Very explosive and impulsive movements right up into test these structure levels again. And then for the last week and a half, you know, we pierced that structure point and we came straight back down inside the range. And then within this candle, we've pretty much had 3 or 4 days where the market has stayed within that range. And then Friday we pierced the high and then came straight back down into the range again. So what I'm looking for here is a break of this trend line here, the short-term trend line. If we get a break of the short-term trend line, then that will show us a shift in sentiment from buyers to sellers. I'll then be looking for a lower high to trade this market back down into structures, 61.50s, and then potentially down to the 59.70s. Now, that's going to be another short Kiwi opportunity. Another Kiwi short opportunity will be Kiwi Yen. So if I just go to the weekly chart, in fact, let me just remove all drawings. If we just look at this chart here, we can see how the market has respected this channel through here. We had the big false push through, and then we've come back to within the channel. If we then drop down to the daily, we can see that now we have consolidated for a number of days and it's formed a base. If we then drop down time frames again, the thing we're going to look for here is confirmation. We want to see that those sellers have really come in and changed that cyclical power. We want to see sellers have changed, the sentiment has shifted, shifted, and we see the market move like this. So we get a breakthrough support, and then we'll be looking for a pullback and trading the corrective pattern from there and lower. And all we're doing here is we're seeing that multiple Kiwi pairs are at extreme levels. So in this case, all at resistance, and then we're waiting for that confirmation structure to break, and then we're waiting for a corrective pattern for our entry. So we've lined multiple things up here. We've gone from seasonal bias, commitment at traders extreme, technical, and now we're looking for a route in, and the route in will be via technical, but it's all got to be confirmed. So hopefully that's made sense, guys. If you've got any questions about the charts we've shown, or any charts you would like us to cover over this coming week, please comment below, or make sure you drop us an email at mark@tradeandtrain.com, and we'll be happy to assist. And if you're not already subscribed to our free Telegram channel, please do so by clicking the link in the chat section or the comment section below. Have a great week, traders. Stay disciplined, and we look forward to seeing you on our content throughout this week. Good night.